Traders are anticipating a long-awaited event. This Wednesday, the US Fed Reserve is going to announce a rate cut. At least that's what market participants are hoping for. While traders wait, there are opportunities to profit from other key events. What other news should traders pay attention on September 17 and 18? Let us discuss that below. You are watching Traders Calendar on the InstaForex TV channel. Mario Draghi, former president of a European Central Bank and ex-prime minister of Italy, warns about the threat to the Eurozone's economy and the migration of European businesses to the United States. In this light, we may see a negative trend in the macroeconomic data. On Tuesday, the ZEF Research Center will release Germany's economic sentiment data for September. Germany, being the engine of the European economy, draws close attention to its data as an indicator of trends across Europe. Higher economic momentum has been weakening. High geopolitical uncertainty and the ECB's ambiguous monetary policy, for example, its recent interest rate cut, continue to affect expectations. Analysts suppose that in September the indicator may drop to 17.2 points from a 19.2, thus showing the lowest level since January this year. This fact could exert pressure on the euro. While euro traders are focused on the data from Germany, traders of the US dollar are closely monitoring reports from the United States, particularly retail sales. The fact is that this data most accurately reflects trends in the US economy. Consumer spending makes up about 2/3 of the US GDP. On a Tuesday, during the American session, investors will learn the retail sales figures for August. In July, economists unexpectedly reported a 1% rise, the sharpest increase since January 2023, well above the anticipated increase of 0.3%. In September, the indicator may show a cautious 0.2% rise. However, the market will likely ignore this data, awaiting the Fed Reserve meeting results on a Wednesday evening. Traders may even ignore inflation figures as they have been pricing in an anticipated rate cut. This in turn will weaken the greenback's position. Meanwhile, in Canada, speculation about the central bank's forecast continues. On a Tuesday, the inflation report is expected to confirm a slowing growth trend in consumer prices, reinforcing expectations of a further monetary easing by the Bank of Canada. In this scenario, the Canadian dollar may continue its corrective move from a 5-month high, favoring the US dollar. The next day, traders will still be focusing on inflation data. Now, from the European continent, the United Kingdom is likely to report a stable inflation rate of 2.2% annually, and Eurostat experts may also confirm the preliminary estimate of 2.2% year-on-year. The US Fed Reserve meeting is a key event of the week and perhaps of the whole year. The meeting is likely to result in a long-anticipated rate cut. The main question is not whether the rate will be cut, but how aggressive the Fed will be. Will it lower the rate by 50 or 25 basis points? Financial markets are relying on the firm statements made by the Fed Chair Jerome Powell during the Jackson Hole Symposium. He said that given the slowdown in inflation, it was time to adjust monetary policy. Here, a word of caution. Remember the golden rule of the market: buy the rumor, sell the news. The rate cut has been already priced in. If the Fed cuts the benchmark rate to 5.25% as anticipated, traders of the US dollar might close their short positions, thus causing a correction and slight rise in the dollar. However, if the Fed surprises with a 50 basis point cut, the US dollar could slide deeper. Please note that the time of publications is set in a GMT plus 3. Check out the regular review on the InstaForex TV channel. Subscribe to our channel and see you next time.